Goldman Sachs, the 152-year-old company that manages $735 billion for pension funds, corporations, governments, they want to help you manage your money. Now, let me say from the get-go here, I do not get any money from these guys at all. I'm not endorsing them. I'm simply bringing this to you because here we have a company with expertise that spans, the better part of 2 centuries at this point. And they are of the mind at this point that the retail investor is where it's at in the 21st century. So they want to bring that expertise that they've generated over this long period of time, they want to bring it to the individual investor, the middle classes, okay? This is important. This is monumental. Yeah, sure, they want to make money, and they figured out that kind of going into this direction where they are kind of servicing the Walmart class, okay, me and you, this is going to be good for them because there are more of us than there are of the wealthy clients out there that they usually have been doing business with. So it's a smart move on their part. Now, here's what I think. I think that if you can get into a situation where you have this type of expertise, because normally you need to come to the table with at least $10 million to get Goldman to even pay any attention to you whatsoever. Well, that's no longer the case. You can come at them with $1,000 and they're going to do a range of things for you for that $1,000 under their Marcus Invest new system that they have, that they turned up today, February 16th, 2021. They're going to do a range of very important things for you. Now, we always say, when we stress doing your due diligence, I want you to go and I want you to research Goldman Sachs. Just go to their website, read the About Us, read their history, read some of the clients that they have served. It's very historical. If you like history and you see what they've done throughout the decades, is very fun to look at, but it's very informative also. So do your due diligence on Goldman. Now, when you take that due diligence a step further, here's what they're offering. Strategic asset allocation. So what they're going to do is they're going to recommend a mix of exchange traded funds. They're not dealing with individual stocks. So, I've expressed my problems with Robinhood on this channel numerous times. I think stock investing is a great thing if you know what you're doing. And I stress investing because, again, that implies a long-term approach. And the companies that I tend to, invest in are companies that pay dividends. So there's the income aspect to it as well. But Goldman is saying we're not doing that. We are taking a lot of the risk out of it, or mitigating a big part of the risk, and putting you into exchange traded funds as opposed to individual stocks. Now, they're offering a range of exchange traded funds, or ETFs. And the thinking is you're going to get the exposure to a lot of different industries, okay, and be able to get some diversification going on. They don't want your success hinging on the prospects of just one stock. And this is important for a lot of people, because if you don't have time to, do your due diligence, I always say, if you are not going to do it, then you have to partner with someone who has the expertise to do it. In this case, Goldman is saying, hey, we can do it for you. We can do it for you. So right here, we have thoughtful ETF selection. Exchange traded funds combine a collection of assets like stocks or bonds into one single fund. ETFs trade on an exchange like a stock. Of course, all the ETFs in Goldman's portfolio have gone through their rigorous selection process. And then they're offering daily portfolio management. Now, again, you're getting into the door with this stuff for $1,000. This shows you how the playing field is being leveled. And part of this is thanks to Webull and different services like that are, bringing attention to the smaller investor. But we also see the dangers of that when we see folk get into situations with incidents like what we had a couple of weeks ago with GameStop, for example. So another benefit that you're getting here with Marcus Invest is day-to-day investment work. They're going to handle it for you. They're monitoring the portfolio and automatically rebalancing your account to keep it aligned with the goals that you set. They have some predetermined goals, predetermined timeframes, and they're going to redo the rebalancing for you automatically. Okay, so remember, this is the kind of stuff when the rich guy was out on his yacht with his ascot on and sipping martinis or whatever, champagne. This was being done for him. This was being done for the wealthy client who, she was at the Westminster Dog Show enjoying that. She didn't have to worry about rebalancing her own portfolio because she probably didn't have the expertise to do it and was unwilling to do the due diligence to make that happen efficiently. They were getting people like, or organizations like Goldman Sachs to do it for them. And this is how Goldman Sachs is coming at you, offering you this service now as well. All right, let's look at a few of the different account options. Aligned with your goals, the account types we offer have different benefits depending on your plans. Now, right up front, they tell you the realized investment gains and dividends are taxable. And remember, the other thing we talk about on this channel is mitigating your tax situation, mitigating the taxes that you owe the government and doing so legally. So they are saying that, hey, if you go in for the regular account where you're just investing outside of any qualified account, there are going to be tax implications. And also, you have to remember that when you do an IRA, a Roth, or a SEP IRA, all of these are offered by this new service from Goldman Sachs, Marcus Invest. All of these options, these 3 qualified accounts here, they defer your taxes into the future when I am telling you your taxes are going to be higher. So while this is one option to, do some things with investing, my particular strategy that I talk to my clients about, now I'm not talking to you, you're not my client. I'm a financial professional, sure, but I don't know you and your situation. So I'm just telling you what I do with my clients is we like to put money into properly structured permanent life insurance policies. And the reason for that is because they have 3 very distinct tax protections. IRC, Internal Revenue Code 7702, 72E, and 101A allow us to grow money tax-free. It allows us to access money tax-free, and it allows the distribution of tax-free money to heirs. Okay? So we tell our clients to go ahead and fund those fully. And then we can look at the qualified accounts later on in the year at the point where we've already, pre-funded or maximum funded rather, the insurance policies. And the reason we're doing that is because we are trying to take every advantage that the government gives us to legally mitigate and reduce our taxation, especially when we talk about money we need in the future. We've got $30 trillion of debt right now, people, and that money is going to have to come from somewhere. Your personal share of that $30 trillion is over $220,000. That's what you owe, okay, as a taxpayer. So you might want to go on and check out Marcus Invest. Again, see if it's for you. Seems like a very good service that's going to be offered by folks with, again, a long history in the financial services arena and a history where they are offering their services and to major clients and working with some really big money. So the takeaway here is they're going to do the realignment of the portfolio automatically, and they're going to offer ETFs, and they're going to base the direction of how they suggest you invest, they're going to base that on your time frames and your investment objectives. They've got, again, a little basket of things that you can choose from to help them whittle down what you want to do, where you are, and what's best for you. So check it out. You might be able to benefit from this.